Listen, I know it's not news to you guys, but it is to Wall Street, apparently. The economy grinding to a halt. Today's GDP report was up only 1.5%, and that's a sharp decline from the last quarter, 3.9%, even further decline from a year ago. Consumer spending helped a little bit, but even that was less than expected, despite cheap gas. Another ominous signal from housing as well. Signed contracts to buy existing homes dropped 2.3%. Second lowest reading of the year, and I think back-to-back drops for that. Still, Federal Reserve is saying everything is pretty good. So where is the disconnect? Joining me now and chuckling just a little bit, John Lonski, Moody's Capital Market Chief Economist, and Dan Shaffer, Shaffer Asset Management President. Why are you chuckling? Because the Fed thinks the economy is okay.
The Fed says, we have to have credibility. But if you want to have credibility and you're in the economics business, you have to be a fairly accurate forecaster. And quite frankly, their record of that particular sort leaves a lot to be desired.
And yet they've got an unlimited printing press, $3 trillion, $4 trillion. Name your number. They can go out and print it up tomorrow based on their abacus.
They can do whatever they want as long as the dollar remains strong and as long as inflation is well contained. But that may not always be the case.
Dan, I'm hearing from corporate America, though, that the strong dollar is one of the biggest things hurting them right now.
Oh, it's a huge headwind, and the Federal Reserve is caught between that dollar getting stronger and raising interest rates. Because the moment they raise the rates, the dollar's going to go through the roof, which, by the way, is my projection of an extremely strong dollar, which is going to hurt a lot of these multinational companies.
Well, we're seeing it. You look at the Caterpillars, the IBMs of the world, getting devastated.
Yeah, Dan's right on, because quite frankly, you look at the results for the third quarter, even after you take out the energy companies and focus on the rest of the S&P 500, sales are up by less than 0.5% from a year ago, and a lot of that's because of a stronger dollar as well as weak overseas economies. And let's not forget, consumer incomes in the United States are still going nowhere.
John, what happened to the old school economics 101, elasticity of the economy, and we haven't snapped back, and cheap gas? I mean, where's all these things that when did we start the virtuous cycle?
10 years ago, 2005, 10 years ended 2005, real GDP grew by 3% annually on average. The 10 years ended 2015, that growth rate is down to 1.4%. We're finding out that we live in a much more competitive world these days. We got a lot more competition from China, other emerging market countries in Europe and whatnot, plus an aging population. We simply don't snap back. We don't grow like we used to.
Dan,
and what John just said was with higher interest rates, we had those GDP numbers. Now we've got these lower rates, so the Federal Reserve has stolen money from retirees, pension plans, elderly, people who need the money to spend. So basically the vicious circle was we're going to lower rates to help the economy, but people that had money and saved and did it right don't have that income to spend on the goods. So the whole thing is collapsing on them.
Where do we go from here?
Well, John, if you don't mind, I'll step in. I mean, at this point, we're clearly seeing signs that the Fed program is not working and has not worked. What's happening is the housing sales have slowed down. The GDP number, 1.5 or 1.4% of that number was inventory buildup was down.
Right. So I'm just asking, are we in or heading toward another recession?
We are in that deflationary depression scenario that I've been talking about.
Okay, right now, defaults are rising. The risk of default is rising. Business sales are barely growing. If we don't have a rejuvenation of core business sales fairly soon, we will be looking at the material risk of a recession come the presidential election.
I don't know which one of you guys gets the Grinch Award, but you look good. Make a heck of a barbershop quartet, just singing bad, sad songs. All right, but good stuff. You guys are brilliant.